Welcome to Gap Advisors channel. In this video, I will discuss an observation relating to Ind AS 1. Ind AS 1 deals with presentation of financial statements. Iyer discussed how the statement of compliance disclosed by the company was not in accordance with paragraph 16 of Ind AS 1 in my previous video. In my previous video, I had informed that there are other issues with the note disclosed by the company which I will discuss in later videos. The company has stated these financial statements. Thus, the company has not identified the type of financial statements. In this video, we will discuss whether such non-identification of type of financial statements is in accordance with Ind AS. Paragraph 51 of Ind AS 1 requires a company to disclose prominently and repeat when necessary whether the financial statements are of an individual entity or a group of entities for the information provided to be understandable. The company has not disclosed whether the financial statements are of an individual entity or a group of entities. It may be noted that paragraph 51 requires repeated disclosure when necessary. Thus, where the statement of compliance with Ind AS is being made, the company or the group should have disclosed whether the financial statements are of an individual entity or a group of entities. Thus, the company has not met with the disclosure requirements of paragraph 51 of Ind AS 1. Further, in this video, I will discuss the types of financial statements under Ind AS to enable the viewer to disclose the proper type of financial statements. For practical purposes, there are three types of financial statements under Ind AS: consolidated financial statements, separate financial statements, individual financial statements. Technically, there are four types of financial statements. The fourth type is economic entity financial statements. Financial statements of a group of entities are called consolidated financial statements. Ind AS 110 consolidated financial statements defines group as parent and subsidiary. Thus, the term group does not include joint venture and associate. Accordingly, when a company that does not have subsidiary but has joint venture or associate prepares financial statements as a single economic entity, those financial statements technically cannot be called consolidated financial statements. Those financial statements are economic entity financial statements. However, Ind AS 28, investments in joint ventures and associates, does not define economic entity financial statements. Accordingly, practically such financial statements are also called consolidated financial statements. Financial statements of an individual entity could be either separate financial statements or individual financial statements. Ind AS 27 defines separate financial statements as parent only or investor only financial statements, which are presented in addition to consolidated financial statements. Therefore, when a company that has either subsidiary or joint venture or associate, the company is required to prepare consolidated financial statements, which include the financials of the subsidiary or joint venture or associate as one single economic entity. When that company prepares its own financial statements, in addition to consolidated financial statements, in which it shows investment in subsidiary or joint venture or associate as one of the financial assets. Those financial statements are called separate financial statements. Paragraph 17A of Ind AS 27 requires disclosure of the fact that the financial statements are separate financial statements. If a company has prepared its own financial statements and consolidated financial statements, and if the company does not disclose that its own financial statements are separate financial statements, the company cannot be said to have complied with Ind AS 27. Till now, we discussed that technically there are four types of financial statements under Ind AS, and practically there are three types of financial statements uh, uh, under Ind AS. However, nowhere in our discussion you would have seen standalone financial statements as one of the types of financial statements. The term standalone financial statements has not been defined under Ind AS. The term standalone financial statements derives its origin and meaning from the Companies Act 2013 standards on auditing issued by the Institute of Chartered Accountants of India and SEBI regulations. Standalone financial statements could be either separate financial statements or individual financial statements. Thus, when a company discloses that the financial statements are standalone financial statements without also disclosing whether the financial statements are separate financial statements or individual financial statements, the company is making a vague disclosure that confuses the users. Such vague disclosures are considered as obscuring information in accordance with paragraph 7 of Ind AS 1. Basis our discussions in this video, the following can be concluded. 1. Technically, there are four types of financial statements and practically three types of financial statements under Ind AS. 2. Ind AS does not define standalone financial statements. 3. The company has not complied with the requirements of paragraph 51 of Ind AS 1. And 4. A company that prepares its own financial statements in addition to consolidated financial statements must disclose that its own financial statements are separate financial statements. Thank you.